I was 19 when I invested my first dollar into the stock market, and despite making many mistakes and losing countless of dollars, I was able to grow that portfolio to over $200,000 at the age of 23. Hi, I'm Angelo. If you're new here, I make videos about personal finance, and in this video, I'm going to be walking you through my entire investment portfolio, some of the worst mistakes I've ever made, and what I would do differently if I were to start all over again. Starting off with my investments in the stock market, this is my Webull account. I have about $45,000 in there with an all-time gain of around $6,500. This is my more risky portfolio where I invest into individual companies that I plan on holding for 5 to 10 years and occasionally trade options. Here are my main positions. I have Apple, Tesla, Costco, Google, Eli Lilly, Celsius, Meta, URI, Amazon, Zotis, Netflix, and a little bit of Visa. The rest here are actually free stocks I got from Webull that ended up doing really well, so I just let them ride. And as you can see here, I'm up on pretty much everything except for Tesla. That's actually the one stock that I'm down on. I even have a QQQ call where I'm up around 36%. Around $1,000 that fingers crossed I'll keep going up. And the reason why I call this my more risky portfolio is because of what I invest in. Since I invest into individual companies and trade options, this portfolio is really volatile. Because when you invest into individual companies, especially trade options, there are many different variables and factors that can affect the price. If we go here and press P&L and go to my all-time gains, you can see how volatile it really is. See here, I was up maybe like $3,000, but if you go all the way up to here, I was down almost $2,000, and this is when I was trading options and lost a lot of money during these two trades, but eventually it went up. But as you can see, even here a couple months ago, it went all the way back down to just $100, and now thankfully I'm doing well, but it's very volatile. If you scroll down here, you can actually compare my returns to the market, and as you can see, I'm getting absolutely demolished. This means if I were to invest into something simple like an S&P 500 index fund rather than trying to analyze and pick individual companies, I would have been up way more, almost 50% more. This leads me to my second account, which is on Vanguard, and it's my Roth IRA. A Roth IRA is a retirement account for long-term investing and allows you to invest, and when you retire, you can take out all the earnings entirely tax-free. And it's so powerful that the government actually limits how much you can contribute each year, and if you make too much money, you can't even contribute. They have an income limit. So I have about $37,000 in it with an all-time gain of $10,000. In this account, I have VOO, VTI, and Google. I know it's a weird combination to have in my retirement account, but I'll explain. VOO tracks the S&P 500 index, which is the top 500 largest companies in the US, and VTI basically just tracks the entire stock market, like every single stock. So by having my money into those two ETFs, pretty much diversifies me into the entire stock market, and as you can see, I'm up around $7.6 thousand with VOO and around $800 with VTI. The only reason why I have Google into my Roth IRA is because a couple months ago, the stock actually dropped around 8% due to some bad earnings. And at the time, I had some money in my Roth IRA because I didn't make a late contribution because I didn't know if I was gonna hit the income limit or not. So I had some money left over, and when I saw that sale, I pulled the trigger. I've always wanted a piece of Google. I believe that's gonna be here for the next 5, 10, 20 years. And so when I saw that 8% drop, I thought it would be a perfect opportunity. And if I had money in my Roth IRA, why not? Now, I don't really look at this account too much because it is for retirement, and that's why I invest most of my money into ETFs. And that's because I don't want to have to waste my time worrying about what's in my retirement account because, again, it's for retirement. I just want something that I know that will grow and will be safe and will be there for when I need it. But if you're young and able to take some risk, you can invest into individual companies. That's why I was okay with investing into Google. You can invest into companies that you believe will be there in the long term, like Apple, Google, and Amazon, whatever you think is going to be there until you retire. So this brings my cumulative portfolio to around $82,000 at the time of this video. And now let's move on to my other Vanguard account, which is just a regular taxable account. This is actually where I have most of my money. And as you can see here, I have about $143,000 and I'm up around $27,000, which is around 10%. And as you can see here, I only invest into one thing, which is VTSAX. Now it's a little bit confusing, but VTSAX and VTI are pretty much the same thing. They both track the total stock market. The only key difference is VTI is technically an ETF, which trades like a stock, so you can buy and sell the stock during trading hours. And the VTSAX is technically a passively managed mutual fund, and you only invest or sell that fund at the end of the day. And another key difference, which is why I invest into VTSAX rather than VTI, is that you can actually automate investments into VTSAX, which you can't do into VTI. Since VTI is an ETF, you have to automate investments into your money market and then physically or manually invest into VTI. With VTSAX, you can just automate money to go into that fund, which is why I like it more than VTI. This is where I invest the bulk of my money. As you can see here, it's been a slow grind up. Like, this wasn't fast. This is where a bulk of my investments are, mainly just because I automate it every single week. And this forces me to prioritize prioritize my saving and investings because no matter what, no matter where I am, I know that money is going out of my bank account into the stock market. I actually have over $1,000 in VTSAX, and that means whenever it goes up or down $1, I gain $1,000. So it's pretty nuts. It really shows you the effects of compound interest, and that's really why I invest mainly into VTSAX and kind of automate as much as I can as early as I could, because I want to take advantage of compound interest. I want to build a snowball that later on when I retire can just pay me dividends and I can just live off of it. This brings the total of my portfolio to around $225,000, which is actually pretty nuts just looking at it right now. And I actually use this free app to track both of these portfolios. Here you can see it's a little bit off just because it doesn't take in options with Webull. And this is where I actually write down my ideas and what I'm thinking about buying. Like when Google went down, I actually posted about it and talked to people in the community about what people thought. And it's just a really cool app. I'll leave a link in the description below to this app, but here if you follow me, you can see all of my holdings, get up to date with all of my trades, and it's pretty cool and it's free. But moving on to my more riskier investments, my cryptocurrencies, this is my Coinbase account, and as you can see here, I have about $15,000 into it, and I invest mainly into Bitcoin, Ethereum, Solana, and some Chainlink. Most of my money is in Bitcoin because I believe that's the least risky investments among the cryptocurrencies, and it's the most adapted and talked about. And if you just look at the returns, I am up about 40% with Bitcoin. I'm about 82% with Ethereum, and Solana I'm pretty sure is crazy. I am up around 1,000%, which is almost $200. I'm pretty sure I only put in like $150 just for fun, and then I stopped. And then I like woke up one day and just looked, I was like up 1,000%. It was nuts. And then with Chainlink, I am up around 100%, 118%. And in total, if you go to my balance, I am up around $9,000, which is pretty good considering that I only put in around $6,000. I first started investing into cryptocurrencies back in 2020 during the first bull run. And sadly to say, I made a lot of mistakes. I was still very new to investing and to how money works and how it affects your emotions, that I fell victim to a lot of get rich quick schemes and FOMO'd into a lot of bad investments, resulting in me losing like a lot of money. I'll talk about the mistakes that I've made at the end of the video, but that is why I don't keep all my crypto in Coinbase into one platform. I keep most of it into this ledger. Here I have about $90,000, almost $20,000 in Bitcoin and Ethereum. I have about $11,000 in Bitcoin, almost $8,000 in Ethereum. And as you can see here, I actually only put around $8,000 when I first made the transfer. So I'm up around, $11,000. I'm up pretty good. The reason why I transferred the majority of my money into this cold ledger is because of all the instances of these platforms becoming solvent, going bankrupt, or ending up being a Ponzi scheme, or straight up getting hacked. Crypto is risky enough, and I don't want to play with the fates by having all my money into one platform. Because if you put all your eggs in one basket, one day that platform can just say they're bankrupt and then take all your money. Now, sadly, I know this through experience. I had about 20K worth of cryptocurrencies in this one platform called Celsius Network. Maybe you heard of it. It was one of those crypto platforms that was offering staking, which is kind of like APY. Basically, you put money into there and then they would just give you free money, like 5%, 10%, every single month. And at the time, again, I didn't know what I was doing. I didn't really see any red flags. So I thought, oh man, this is a free money. Let me just do it. There was so much hype around it. Everybody was putting money into it. What could go wrong? Needless to say, I lost a lot of money. The exchange went bankrupt and they restricted withdrawals for around like 3 years. Which brings me to my Venmo account where I have about $6,000 worth of crypto. And this is actually the money that I was able to withdraw from Celsius in some sort of settlement. So out of the $20,000 that I should have gotten, I got around $6,000. Hey, I'm grateful for anything at this point. You live and you learn. So in total, my investing portfolio is around $259,000, which includes everything from stocks to crypto. And of course, this number fluctuates because a lot of my money is tied into stocks that mirror, the S&P 500. So depending on the market or the economy, it really goes up and down a lot. Now, I acknowledge that this portfolio, especially at my age of 23, is a lot, but this is mainly due to the fact that I was able to invest early on when I was 19 before COVID, and the fact that I was able to significantly increase my income during those years. If you want to see how I did that and how I made my money, go check out my first video. I literally laid out my 7 streams of income that helped me make this much money at my age. But even though it seems that I'm doing very well, I've made a lot of mistakes and lost a lot of money. When I was just beginning, I didn't truly realize how much of a long-term game investing is and should be. Like, it's truly the turtle and the hare story. Slow and steady always wins. Because I lost a lot of money trying to get rich quick, specifically through day trading and cryptocurrency. When I first started investing to the stock market, I actually started off day trading. Now, I know Wasn't a very good idea because I barely had any money and I was really just gambling everything that I had, but I did it, and ultimately I lost a lot of money trying to time and beat the market. And cryptocurrencies, I already told you the fiasco was Celsius, but I did not tell you how much money I lost with NFTs, specifically Top Shot. At the time, crypto markets were going crazy. It was a whole bull run and people were making millions of dollars off of NFTs. And the only NFT that I really found interesting was Top Shot. And at the time I was really into basketball, so I would see my favorite players and my favorite highlights into NFTs and I can make money off of them. So I put in so much money into that, maybe 5 to 8 grand. And guess what? It's pretty much all zero. Now that I'm thinking about it, I did buy this other NFT off of Nifty Gateway for like $2,000 and now it's going for around a couple $100. So that's that. And if I were to start all over again, honestly, I would have just kept it boring and dollar cost average into index funds. This would have been so much less stressful, giving me so many less headaches, and I probably would have been up way more. Dollar cost averaging into index funds is my main strategy and the strategy that I'm using to become a millionaire by 30. The goal is, while I'm young, is to invest as much as I can to create a snowball of money in the stock market that can later live off of. That's because I want to take advantage of compound interest. My strategy is to essentially keep my investments as simple as possible and divert all of my energy and focus into increasing my income. But this is my portfolio. If you enjoy this, if you like this financial transparency, please leave a like and subscribe. It means the world to me. And of course, till next time.